Hello and welcome to the Silver Log, the 10th of May 2011. Gold gaining 0.2%, silver 2, and it was definitely a less volatile, less volume kind of day, with the markets proceeding towards the upside, keeping the short-term trend bullish. On the daily chart, and the reason why the short-term trend is bullish is because 3 days is short-term enough for me. We've managed to find the support in here, and I look at this sort of like a boxing match, resistance versus support, pretty much. And the participants for resistance is this 50-day moving average. You also have the 5 and the 20 as well on different charts against this Fibonacci support line in the 33 area and this volume weighted average price, because if it's not going to break either one, the market's going to move towards neutral period, which would be sideways consolidation. It is now at an area where it looks like it could find the level of resistance. However, as I stated back here, if it doesn't find resistance and go lower, then it does become that of a failed move, because this is when it's supposed to happen, and oftentimes that brings fast moves, sort of like what happened in there. We've already had a big enough hit to consider this level to have established some sort of resistance, or excuse me, support, when we look at this later on after the fact. Volume still becomes, or is still becoming, that of lower over the last 2 days, and yet extremely massive, under 100 million traded today, which is quite a bit. And it is a manipulated market, and the big thing is it's really only price that pays. If the price states here that it's around 38 and something an ounce, then that's what the majority of people are going to fluctuate their prices within. They may do a certain percentage over spot, maybe $3 over spot, change it up or down every so often as prices increase or decrease, and then you can decide, do you want to be a buyer or seller within that sort of environment. And when we see the market in this situation here, because it's been in a huge uptrend, it could very easily break through this level and come down to 25. As I've been stating, the disconnect would be pretty, it would get at least much more significant at this level. And it's also if an area where, if we do rally from here, maybe make a higher low at some point, where we'll look after the fact and say, yeah, there was a correction that happened in April into May. And that could work out where we say we move up towards here, pull back, establish a higher low in here, and then at that point there, $50 wouldn't be as big of a deal, because this will be the fourth test at 50 when we reach there. This test was the second. This was, or the third, excuse me. This was the second, and then 1980 in itself was its first, and it might have had a few, 2 or 3 tests in 1980. I don't think it would have been more than 2. I would have guessed 1 test on the January moment when it made it to 50. Okay, let's now move on. On the hourly chart, it's a major capitulation sort of level. It's not really capitulation as far as the long term level is, but within the short term, it pretty much did. It found obviously it found support at the 33, but right now it's up towards this Fibonacci mark. This is the 38.2% from this high and this low. The market on this intermediate level is bearish as long as it's below this line. It's getting towards it. That means it's cautiously bearish more than anything, because if it can find some way to get above this level, then that would bring us into a neutrality mode in the areas of 38 and change, 39 basically, upwards to about 42.5, 43. basically these lows in here would be the best line to, or the best level to use, which is 42. So 42 would be the area for the significant resistance if it manages to come across through there. Now the 5-day moving average, it's come to this level, it's went above it. That doesn't, well, it's broken. I was going to say that doesn't mean it's broke it, but it's very common for it to pierce within it. Also, if it can manage to just stabilize, really stay above this 37.25 level, 37.50, then that can make the 5-day moving average really start to go sideways. So if the market continues to correct through time, then that would make the 5-day moving average also work through time. And if it did trade sort of like how it's shown in here, that would mean that within the time it's consolidated enough at this Fibonacci line where it becomes more probable to break this level, because for now the chances of getting by this at this pull without some sort of correction is not that good. We've come up to this level. It's very often that it's found there. Now, like I stated, it can do something like this before breaking through. It can continue going lower, but at the same point, it can go higher. It's just unlikely that it does. I don't know what the percentages would be, but very often these levels are used as resistance. It can be bullish or bearish to find resistance, but for it to be bullish, it really needs to find a higher low, really above into 35. If 35 is a significant level, I want it to hold to start to see this thing turn around and start to correct itself and recapture those losses. On the short-term time frame, the trend line, that's a little bit too big. We'll use a smaller line, but the trend line that's connecting these lows is in here. Therefore, it's your classic very small move, but it's efficient, and the small move is from 33 to close to a little over 38. It's well over 15% on a small correction. The moving averages in here, the 5 and the 1, it was a cross pattern in here. This is a little bit of a bullish sign, but the same gesture, it's got to get above this significant Fibonacci line. If it can come back, like I said in the last chart, come to 35, then that would increase the chances of breaking this level in here. Now, as far as trend lines are concerned, it's really now just a matter of waiting for this thing to find resistance, because wherever it finds resistance and pulls back, that's the level it'll be connected to within one of the highs. As far as the volatility is concerned, the movements are nowhere near as big. It's a little more volatile than the previous regular days back in March and April and so on, but it's also dropped a little bit. This is the move of 15%, which was, or 14, still pretty big, and it's making this pattern here of lower highs and lower lows. I don't know if the old saying is going to be true where previous resistance is going to be support, because it really wasn't here. But a lot of times this could be calm before the storm, and for the market to recuperate what's going on, let the what has to happen be done, and then let the market move on from there for the most part. But at the same point, because it hasn't rallied too much, I wouldn't be as excited for early gains right now. Long term, of course, tremendous. As I've stated, I talked about how there hasn't been a day which is the top 10 weekly gain yet this millennium, basically. The top 10 days of silver in all time, basically, at least since 1968. None of them occur in the 2000s. So we are due for some big days, and when that happens, this market, or this, well, it's not really a market, it's just some calculations more than anything, but this is going to keep going higher. The trend for the daily volatility is clearly moving towards the upside. This type of chart is the one you would use if you're just trying to teach someone technical analysis, because you have the regular declining pattern, and then it's developing, it's correcting through time, and then the breakout, you figure the resistance 70, obviously 1, 2, 3, 4 hits, it's broken. So that's classic technical analysis. stating this is going to go higher, at least whatever this chart represents is going higher, and what it represents is volatile moves within the daily time frame. So we'll just keep our eye on that. The weekly chart, still bullish. It's not often you can have a crash of that much in a week and keep the massive uptrend still alive, which is obviously the case, and that massive uptrend stays alive as long as this trend is not violated. The overall uptrend, or the big significant one, are the ones that connects the levels within here. This one is, we're bullish as long as we're above this, basically. But this line here is very much the big one to watch out for, because what's been going on here is I'm looking for breakout signs that will show explosions, and I'm looking at the charts on a technical level. Were they here? Big time. Why? Because you broke a major line that has a huge rate of increase, or at least bigger than it's experienced before. It gets above it, so now it's got that decision time. Is it ready for that explosion? They chose no, it's not. So it's an explosion to the downside. But now what this tells us is, with this increased volatility, when you're looking for the signs for the big explosions, you really want to look for the ABC sort of analysis. And the A is this high, the B is this low, and the C is where you're coming towards. If it doesn't take much time to get towards close to this level, get above the 61.8 in here, and move to the upside, then you got those warning signs again. Basically what that means in the short run is, if we can quickly get above the 48-49 level within the next, this is a weekly chart, so we'll have to say 3 candles, within the next month or so, even 6-7 weeks for that matter, then watch out as we move towards the top part of this uptrend line. Okay, finally, we'll look at the monthly chart. Once again, nothing to violate it. If anything, it's showing a sideways one candle consolidation. When we look at what's been happening recently, where are we now, where have we come from, and where do we have the potential to go? This was another saying that I used from alphatrends.net, and we're the trend that we're in right now. We're up. We've had a little bit of consolidation. We were in a long time in a sideways consolidation, even much longer than what this chart shows. We've been in a rally. Do we have the potential to go higher? The answer to that is obviously yes. Why is that the case? We have to look at the numbers from top to bottom. The lower number is about 4. The highest number is about 50. So that's about 12.5 times of a difference. Where have we come from? We were at 50 back in 1980. How many of these types of commodities and major indexes are this much below their major highs of the 70s or early 80s? None of them. They're all well above it. So that gives us the potential to go higher within a mathematical level. Once again, we can see the aggression, or the aggressive uptrend line that this comes with. If we do break any of these type of aggressive moves, that's where the explosive kind of plays come in, where you would start to see candles. There's really nothing that big that would break every single up candle. Let's just put it that way. One that would be the size of, let me just draw a quick little one in here. At least a candle of this size, if not even a little bit bigger. Alrighty then. Thank you everyone for watching this. One more quick thing, yes. The one thing I wanted to point out, which is the Fibonacci of the upside. It's had a lot of resistance in this area. Also the Fibonacci from the 50 high, which was important, from 1980, and the $4 low states 19 and change. 1905 is the big Fibonacci level. In order for the selling, the crash of 1980 to be real, then it needs to stay below 19. It did for its entire run until the breakout. It still mathematically, with that theology, can come back down to 21 and still be bullish, because of that. Of course, within the inflationary values, that would be ludicrous. That would be a major disconnect. Yes, I know. However, we've got the signs to the break it. I was stating in here that it was pretty much a lock going to 50. That happened. Now, when we adjust the message of the market, if you can have any decent correction, really you'd want to stay above this level here. That's 25 to 28. Even, yeah, 25 to 28. And then bring it back up to 50, then that increases the chances much, much greater of taking it out. And right now, it's only had this small consolidation candle, which isn't that much. The 3140 level, or the 3128, 3128 was a big high. 3142 is the level I've calculated. If it comes back to this level of support and starts to go higher, really give it the benefit of the doubt towards the buyers. I still like the chances we go to 31 before we go to 50. But again, that I don't know for sure, because how would I know? We'll see. Take care.